At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, October 17, 2023, Lucid Motors drops 3% on third quarter delivery update. Lucid is not on track to satisfy its production guidance of 10,000 vehicles. Lucid delivered 1,457 vehicles and produced 1,550 vehicles during the third quarter. The company will report Q3 earnings on November 7 after the market close. Lucid stock is down by about 17% so far this year. Lucid, Nasdaq LCID, stock is in full focus after the electric vehicle company released its delivery and production figures for the 3 months ended September 30. During the third quarter, Lucid produced 1,550 vehicles and has an additional 700 vehicles on the way to Saudi Arabia for final assembly. Deliveries for the quarter totaled 1,457 vehicles, much lower than the analyst estimate for 2,000 vehicles. Lucid's third quarter deliveries were a point of emphasis for some shareholders, as the firm had previously published its last 4 quarterly delivery and production figures on the 12th or 13th day of each month. This quarter's metrics came in on October 17, which has led many to believe Lucid purposely held its numbers back. The company has not publicly commented on this matter. Shares of Lucid stock are currently down by about 3% on the news. Lucid reports third quarter production and delivery figures. Lucid previously guided for the production of 10,000 vehicles in 2023. As of the third quarter, it has now produced 6,037 vehicles and delivered 4,267 vehicles. Averaging out the quarterly production numbers would give us just over 2,000 vehicles per quarter so far this year. That is not on track to meet the expectation for over 10,000 vehicles in 2023, as Lucid would have to produce around 4,000 vehicles during the fourth quarter. On the bright side, Lucid delivered more vehicles during third quarter when compared to its second quarter deliveries of 1,404 vehicles, although not by much. Second quarter production also totaled 2,173 vehicles, much more than this quarter's production. Lucid also disclosed that it will report its third quarter earnings on Tuesday, November 7 after the market close. The company will partner with Say Technologies in order to facilitate retail and institutional investor questions. For the quarter, analysts forecast revenue of $212 million, which would imply year-over-year growth of 8.7%. Furthermore, Lucid is expected to stay unprofitable with an adjusted and GAAP EPS loss of 41 cents. A year ago, the company reported an adjusted EPS loss of 40 cents and a GAAP EPS loss of 32 cents. For fourth quarter, analysts expect revenue of $281 million, signaling year-over-year growth of 9.2%. Adjusted EPS is expected to stay stable compared to the third quarter at a loss of 40 cents. Lucid Motors just showed it's time to bet on EV stocks with lower-cost cars. Investors should pay attention to the bigger picture when it comes to Lucid's news. Lucid Motors just failed to meet expectations on third quarter deliveries. This news confirms arguments that demand for high-end electric vehicles is falling. Instead, investors should be focused on companies that build cheaper cars. One of today's biggest stories is the news from Lucid Motors. The trendy electric vehicle producer has announced its third quarter delivery statistics, and they are not encouraging. As Investor Place's Eddie Pan reports, Lucid produced 1,550 vehicles and has an additional 700 vehicles on the way to Saudi Arabia for final assembly. Deliveries for the quarter totaled 1,457 vehicles, much lower than the analyst estimate for 2,000 vehicles. With that in mind, it comes as no surprise that Lucid stock is down today, a clear reaction to the delivery report. Missing Wall Street estimates is never a promising development, especially when a company has been struggling for weeks. EV stocks have been volatile, but Lucid's performance has been highly discouraging. As Lucid stock has struggled throughout the past 2 quarters, experts have questioned its once bright future. While focus today has been on this company, investors should be careful to see the big picture when it comes to Lucid's third quarter deliveries. This is clearly the time to focus on lower-cost EVs rather than the luxury vehicles for which Lucid is known. Focus on better EV stocks. Despite a quick surge as markets opened this morning, Lucid stock quickly proved unable to sustain this momentum. As of this writing, it is down 6% for the day and isn't showing signs of a rebound. This race to the bottom comes after a turbulent week and an even more volatile month. As other prominent EV stocks are rising today, this performance clearly isn't due to market momentum. That said, there is a key lesson that investors should take from Lucid's recent report. EV demand has been slumping recently as consumers opt against buying expensive new cars. This trend seems to have been primarily sparked by the rising cost of EVs, as rising economic anxieties compel buyers to opt for less expensive options. This demand slump isn't good for companies like Lucid, which produce visually appealing but expensive cars. However, it creates a key opportunity for companies producing lower-cost EVs and hybrids to expand their market share. This group includes companies like Toyota Motors and Nissan, two well-known automakers with decades of experience producing low to mid-cost vehicles. Toyota is well suited to take advantage of this trend. It produces many hybrid vehicles and has invested in EV battery production. Another company that could see EV sales rise is Fisker. While this EV startup has struggled lately, it has been working hard to provide features that will let it compete with higher-end automakers. In normal times, this list would include stocks like Ford and General Motors. But right now, Detroit's big three automakers are dealing with a large-scale workers' strike. Until the companies can reach an agreement with the United Auto Workers Union, placing them on a list of EV stocks to buy is difficult. What comes next? All this isn't to suggest that Lucid can't recover. Lucid stock will probably rebound when market conditions shift back in its favor. But for now, it makes more sense to bet on the EV stocks that benefit from a spike in demand for lower-cost vehicles. Investors will likely be seeking to hedge their bets as economic conditions remain uncertain. Until they do, it will probably make the most sense to avoid higher-end EV stocks. Thanks for watching.